Okay, now that we've talked about position trading, we need to talk about what's in between position and scalp trading and being a grinder, which is swing trading. Swing trading is obviously the in-between of scalp and position trades. It's the trades that can last anywhere from 4 hours to a few days and so forth, right? It's kind of the in-between of you don't quite want to actively be taking every single position or every single trade as a position, turning it into these kind of long-term position trades. You don't want to be taking every single scalp trade and exiting it constantly, right? So we're simply going to continue working off our chart here, and we have our first hold level here, which is hit right against the trend that is created. So we've created trend, we've hit our hold level. So kind of what do? You're in this kind of weird spot where there's not really any position trades to take. You're looking for kind of maybe some of these marginal dumps. You're looking to be in a trade for maybe 1 or 2 days. This is something where you have to scale your amount that you're trading with off of your active account, right? So your active account has to include your swing trades. So for example, we had $150 on a position trade. We have $500 in our active account, right? So we're going to go like this, 500 active. We are going to go 93.50 as our total account, right? So it's 10,000, but we have 93.50 left in the total. So now what do, right? Okay, so now you're looking at these positions and you're saying, okay, well, I need to take a trade in here, and maybe we're going to break down some technicals first. So we're going to look at this. We're going to say, okay, this hasn't been holding. It's obviously targeted this hold level next. And it's kind of caught in this spot right now where if it continues to hold this range, it's most likely going to hold this range up and through this trend, right? Like you're most likely, if you continue holding the top of this range for long enough, you're going to slowly ladder against it like this. You're going to come here, and then you're going to come here, and maybe like this, and then like that, and then you're going to kind of go like that and float through the top, right? Like, what do you do here? Because there's not really any position trades to take. There is kind of all these little in-between trades to take. Like, what do you do, right? So you have to start taking the trades that are in between, right? So you have to say, okay, here's a hold level. I want to buy this. And this is kind of the management of stop losses, right? Like this is kind of where you perfect your management of your stop loss. So in your 500 active account, you should take possibly, to start with, you guys should also use a relatively low number. If you're taking $200 in your active trade, per grind or per scalp, right? This kind of covers scalp trading, per grind / scalp trade. That's fine. You're going to want to take $100 on swing trades, right? It's kind of the same idea, and it's the same mentality as taking larger position trades, more methodical trades. Like you have a bit of a bigger payoff, so you don't need to risk as much. Your payoff in your account growth is going to be a lot better. So what are you looking to do here? Well, okay, swing trades. Let's talk about swing trades. Swing trades can be anywhere from catching a falling knife, right? So there's kind of a delicacy there. Like you catch a falling knife against this trend, you come straight down, you swing trade this. You have 2 ways you can develop this trade. Okay, you can knife catch like we talked about as a grinder, and you can sell for your kind of point spread that we talked about, kind of 20% or 1/5 of whatever it dropped is like a really good mark. So you can just quickly get out of the trade, or you can continuously hold it and raise your stop loss. I would not recommend that on a knife catch for the first time. Rather, I would recommend that when you're starting to do something like this. You have this here, you're going to come pull back, knife catch, stabilize here. I would recommend a swing trade here, not on the knife catch. The knife catch is quite simply catch the knife, sell the inverse, take your points or set your criteria out, take your free trade and be on your merry way, right? This isn't really smart to be taking a swing trade on a knife catch like that. It's more of a scalp trade. And then when you come back and stabilize, right? Because you're going to always have that where you have a falling knife and you need to stabilize. You're either going to test it again and fail down, right? Or you're going to knife catch, test it and hold some range above the actual bottom of that knife catch, right? This is where a swing trade comes in, right? So if we kind of were to break down the queue of trades, it looks like this. A grind trade or a scalp, whatever you want to call it. Take your position here. You reshort the top. Upon this holding above here, that's kind of the trick. So let's talk about that step number 2, right? So step number 1 is you have the knife catch, okay? Step number 2 is we're going to say this is the inverse right here. So we're going to sell the inverse and reshort it, okay? So the inverse is saying that we're going to go down unless we enter a Pandora's box. So you already have the first trade here, number 1, right? Number 2 becomes the exit of your trade here and the reshort, because 2 things are going to happen now. You're going to hit the inverse and you're either going to Pandora's box and hold this up, right? You're simply going to inverse into big failure. So your swing trade starts in 2 spots, okay? Your swing trade starts either... Okay, let's keep that up. This is number 1. This is already complete, your knife catch. Your swing trade either starts on number 2, where you are having the inverse level and it is going to hit the leg and you are going to fail down, and you can leave this open and kind of readjust your stop loss as you go to secure profits, right? You can readjust your stop loss as you go and secure your profits. That's where the first swing trade exists. The second swing trade exists on trade number 3, which is kind of right here, which if it holds above this, it's holding a higher range. That's where you can take your actual swing trade, number 3, right? So you have 3 trades already. On this knife catch, there's kind of 3 trades in there that happens. There's a knife catch scalp. There's an inverse position trade that can either turn into... It doesn't have to be a position trade. Like if this holds, if number 3 holds, if you actually hit a hold level, this isn't going to be a position trade. You're just simply going to exit the trade and look for the spot to restabilize and relong the confirmation of the move, right? It starts as a knife catch, as a scalp. It then turns into get out of the trade at the inverse, take your short against a position trade to see if that position is going to continue moving down or if you're going to hit a hold level and move up. So you are now looking to say, okay, position trade is open. Let's close the position trade, therefore making it another scalp. So number 2 turns into a scalp when number 3 becomes true. So when number 3 becomes true and you actually have a new position trade opening as a long, number 2 is simply just a scalp. So you actually have 2 scalps in there and a long, or 1 scalp and a short, right? Or I should say 2 scalps and 1 position trade, or 1 scalp and 1 position trade. The 1 scalp and 1 position trade is 1 scalp here to there, and this turns into a position trade down to here. That's the 1 scalp, 1 position. The 2 scalps, 1 position is this. You buy here, you short here, you relong here. So it's scalp, scalp, position, right? I keep saying position trade, guys. I'm sorry. I mean swing trades. Swing trade. I'm in the habit of saying position trade because I just recorded the position video. So we're not talking about position trades. Sorry. Every time I said position trades here, replace it with swing trades. We are looking to swing trade. So scalp, swing, or scalp, scalp, swing. That's the way it works, right? So this is kind of the in-between of being a grinder and having the every single trade all day long, looking at these trades constantly, right? You have to kind of have a even further broken down. You have to have an even further broken down criteria here, right? So now we're starting to build out a bigger criteria, right? We have a certain percentage of our portfolio on a position trade that's going to guarantee us large profits with the least amount of risk. These are position trades. Position trades are the largest profit with the least amount of risk. We then have swing trades, which are in between scalping and position trades, where scalping we're doing all the time and we are trying to take constant 50 points here, 40 points there, 100 points here. And then you have swing trades, right? The in-between, where you are trying to set up a larger piece for the move. So it's kind of, you want to reduce the risk further in your account by having some of these swing trades when you see some pretty glaringly obvious stuff. Like let's maybe just go to a 1-hour chart here and pick a random spot. We're just going to drag the screen over to any random spot right here. Yeah, okay, that looks good, where we have this thing that says total. And we're just simply going to look at where something has laddered. Okay, so we're simply going to mark it out here. This comes up, you have a pullback, right? So as long as this leg doesn't get hit, you have all this big pullback. As long as that leg doesn't get hit, you're going to be in a position trade, right? So then you can enter anywhere in here as a I keep saying position trade, as a swing trade. Jesus, I'm almost going to have to re-record this video. You can enter anywhere here as a swing trade. And this is the swing trade, and it goes up. And how long does this last? From the 29th to, well, this is actually turns into a position trade from a swing trade. But this started out as a swing trade. You're not breaking any sort of big technical. You don't have some methodically planned out action that's happening. You don't have some large level that's being hit. I guess this isn't so bad from July 17th to July 28th. So it took 11 days to materialize, and it came back and it pulled back and it laddered from one spot to the next, right? Like you have this to here, it ladders. This would have been the first spot where you have a position trade, right? And then on a larger time frame, swing trade. Jesus. This would have been the spot where you ladder here and you move up here. This would have been a great spot to take a swing trade, right? Because you have a day or two that you're in and you can realize a lot of profits here. Like, what are the profits here? You're not going to have position trade profits where you're looking at 30, 40%. And this is kind of the top of the range for a swing trade. Usually swing trades are somewhere between 5 and 10%. This was a rather good swing trade that had 17%. So risking $100, you made $1,700 on 100x if you got it properly. Now that's a top and bottom, so just call it 12% or even 10%. Even if you bought from right here when it started to stabilize and move up, and you just sold for 10%, it's still $1,000, and all your risk was 100. So you just gained 10% of your account for risking 1/10 of it. Like that's incredible, right? And it doesn't take a lot to be correct there. You have a very good ratio. If you like, play with ratios, you have a very easy ratio. And then the same thing happens here, as to where all you have to say is, oh, we have to ladder off this here. You have another position trade where clearly this inversed and it failed down off of this here. But that's fine too, because you had a swing trade that from here to here, you've got your 6%. So this is fine. This is 5 to 10% somewhere. Take 5%. This is a great result, and it doesn't impede your ability to take position trades. These swing trades don't impede your ability to take. Swing trading doesn't impede position trading. Swing trading also doesn't impede grinding or scalping. So this doesn't do anything to either. It's another completely free position type that you can take. And then so fine, you inverse the level. You would have sold there. You would have reshorted here. Again, another position trade. As long as you don't wick this leg of the move, you're fine to move up again. And this turns into a swing trade opportunity that was, so you're right here, right? And you can see, as long as you don't touch it, you can position trade this. So you can just get in down here. It takes a little hit down before it moves up big. So again, it's just a simple swing trade that we can add to our repertoire. Now we have position trades that we should be managing actively. We have scalp trades that we are grinding out every single day that we're actively managing. And now we have some of these swing positions that we can also add into the mix too, right? So now we kind of are having this repertoire of all these different trades, right? A good example, something I like to do would be like this. So this is kind of one of my little cheat techniques that I do. It's not really a cheat technique, but okay, let's just say we had a position open from, as long as we didn't hit that and we just let this position open and we just continuously, maybe we actually were so good that we sold up here and we were able to buy this level down in here somewhere. Okay. So what's next, right? You have this position open and you're in a swing trade. What's next? You start marking out levels. That's what's next. You have, come on, this right here, which was this inverse right here, right? So you have this inverse right here, and you can start taking shorts against that inverse. So you can leave this position open as a swing trade, and when you hit this, you can take the short against it and restabilize the move and just close your short for profit. So you can keep your long open and you can just take a short against that level, right? So you can actually just short this level right here. So you can take your 100 points here, or sorry, 1 point, geez, 100 points. You can take your 1% here, right? Like, or what is this? Let's try to get this without the magnitude. This looks like more than 1%. Yeah, so you've got almost 3% there. So maybe you took 1.5%, right? And then you can go here and you can say, oh, well, we have our origin level looks like right here. I'd have to switch time frames to see where it is. Going a little deeper here. Looks like right here is the origin. Tries to close above it. So then you can take a short against here. And so fine. You have another 200 or 200% there to, X amount of points. And at some point you can decide, okay, our target has been hit. We can exit our swing trade. We've still been able to grind out shorts. Every time we hit one of these targets, we want to leave our swing trade open. It's turning into a position trade. So now we have the best of all worlds. Now we have positions that we're actively managing, longs in or shorts, and vice versa, right? The same thing is here. Like you could have taken a swing trade here and then just looked for these levels to relong, right? Like you would have been here, the first jump, right? So this already happened. We shorted against this level right here where our blue circle is. And then we rebought this level right here, giving us this bounce right here or this bounce right here. And you could have made another X amount of points while still being in a swing trade that's turning into a position. This is another 2%, which is incredible, right? And this is where you're using a larger amount of your account because they happen frequently, they happen all the time, and they're easy to control, these kind of little kind of bounce trades or these little tiny grinding trades where you can very easily see what's going on in the market. You can easily take those trades and just manage a larger amount on them all day long.